What is the worst month for investors and what should we do during times like this? Let's go ahead and break it down. One of my favorite things about the stock market is the fact that we have data and stats and math. And I say that because when you're investing in real estate, the returns they're up there. What you do in New York and how much it costs to invest in New York is different in real estate than what it is in Omaha, Nebraska. It is different than what it is in LA or Tulsa, Oklahoma or Miami or Dallas. It is all up there. And even within those cities, the zip codes matter around how much money you can possibly make and what is good, right? We know that a good year for the stock market, an average year, is 7%. You get more than that, that's great. This year, at the time we're doing this, the market's up 15%. It is a very good year. And on average, again, I can make about 7, right? That is what I can expect from the stock market over the last 95 plus years. But what month is the worst? Okay, the worst tends to be September, going all the way back to 1928. The stock market drops, the S&P 500 to be specific, drops 1.1%. Last month, which was September 2023, the stock market was down 5%. Now, I feel like nobody really talked about that. Like, I had to go back and look. I knew that the stock market hadn't been great over the last several weeks, but I know it's down 5%. It's probably because overall, year to date, at the time that we're doing this video, the stock market's up 15%. So maybe we didn't notice. Maybe we didn't, okay? Which is good that the market was up. Also, more good news, December and January tend to be the best months, with December rising 1.3% on average going back to 1928, and January rising by 1.2% going back to that same period. They call this the Santa Claus rally. Now, I will put a little bit of an asterisk there because, as we have mentioned many times on this channel, we know that retail spending is expected to rise, but not at the same rate that we have seen over the last 2 to 3 years. I'm not saying that's going to hurt the stock market or not. I'm reporting the facts, okay? And that is an estimation of what they think the facts will be. So take that for what it is. But even though that we've already passed September, we're already in October, which doesn't tend to be one of the best months, how should we navigate periods like this? I would argue that especially in September, but even in times like this in October, these are times to consider looking for those discounts and consider what it is that you want to get rid of as well, especially anytime like now. So when the stock market is a little shaky, when you're in earnings season, this is that period that you want to put together your watch list. I already have one together of stuff I want to get rid of for this year and things that I want to consider picking up. And remember, this is around the time where the stock market tends to rotate. We have seen this year after year after year. There tends to be a little bit of a theme. I want to say at the end of, what was it? At the end of I'm trying to think. There was a point, right, at the end of 2020 going into 2021, that's when the stock market started shifting. I'm sorry, into 2021, moving into 2022. That's when we started to see a shift and a rotation going into energy stocks. That was before the Russian-Ukraine war, and then those energy stocks took off even more during that period. There's a point in time where we were shifting away from technology stocks, and now technology stocks and artificial intelligence started to take off. In fact, right around, I would say, between October and December, this is around the time people started learning and hearing about ChatGPT. That was where the artificial intelligence bubble, or whatever, explosion, let's call it an explosion, started to take off. We are moving towards that period right now, and right now I don't know what that next thing is. Otherwise, I would have told you already. So I will be keeping an eye out, but this is the time that you want to start to put together that watch list of things to cut and things to put together, and pick up some discounts if you feel that to be appropriate, because September wasn't that long ago. There are still some stocks that took a beating that probably did not deserve it. So this is your opportunity to put that list together and to start taking advantage before this next expected run up, this next historical run up. Because if the Santa Claus rally holds steady as it has in the past, this is that buy low period as the stock market starts to take off again. I will also say that February tends to be one of the worst months. I would say probably second or third place if we're going to rank all the months, because according to my sources that I was reading for this article, it seems that people get happy, they make that money during December and January, and they start to cut their losses or take those profits in February. And again, that tends to be quite consistent as well, especially when January is good. You start to see February kind of taper off before the rest of the year goes through. So keep all that stuff in mind, get your list ready, and start to make some preliminary adjustments and start to get that research out the way. It's also good that we are in earnings season, which gives us an opportunity to read up on what's going on and what we expect for the last part of this year. If you're looking for other resources on what to invest in and what stocks are working, what sectors are working as well, you want to check out these videos right here.